Macron took a year to build from nothing. Marine Le Pen is hoping to recast herself in 2 weeks. What do you make of the move?
Well, look, I think it's probably fairly sensible in the sense of you're looking to move a bit more central, trying to capture some of those middle votes, the votes that maybe went to Fillon, votes that went to other more centrist candidates. So from that perspective, I guess it makes sense. Although, of course, if you look at the polls, it still seems to be the sense that Macron would beat Le Pen in the second round in 2 weeks' time.
Your view on European equities, then, give us an update on how your thinking has changed or has not been changed by what we saw yesterday, the victory of Macron and Le Pen, and getting into the second round, that sense of victory. And we wait for May the 7th, of course.
Yes, no, look, I think the fundamentals had all been quite strong. So we'd seen these PMIs in Europe hit 6-7-year highs, and critically, we'd seen earnings turn. And that's really what Europe needs, right? We've had no earnings growth for almost 7 years now. And in our view, 2017 will be the first year where you actually deliver on that. And we think there's a whole lot of evidence, be it backward-looking data, forward-looking data, corporates, top-down, bottom-up, and that's building quite comprehensively.
We were discussing in the last hour whether this was a window of opportunity before we get into a potential Italian vote in 2018, which might be a little trickier, a little bit more of a concern for markets. Is this a window, the rest of this year?
I think it is, right? So we'd always knew we had a very election-heavy year for Europe. We had obviously the Dutch, which we navigated. We've got the French, which we're navigating now. We have the Germans in September. We've got the UK vote now, which we didn't know, which is in June. So those are busy, but I think really it's the French election that is of concern to external investors, and they are the swing investors, right? It's not so much the Europeans, the domestics in our time zone. It's people in Asia, it's people in the US. Those are the flows that are swinging the market up or down, and they're the ones that are worried about politics.
We had JP Morgan Asset Management in just before you. Not that the two of you compete in the same space in any way, but I think the point that JPM Asset Management were making, Mike Bell was making, was that you'd seen such an exodus last year from Europe that it's turning into a trickle. But that trickle, what does it do to turn that flow into a big move? This is a chart that we looked at. In other words, the market drawdown. Anna, you chatted about this earlier, which was political risk came, political risk was on the horizon, and you have no excuse now to not get involved. But this is the market's reaction. It's becoming much, much more, I suppose, benign to risk, isn't it? Political risk.
Yes, look, I mean, I think that's right. And we'd written previously that we didn't think there was a huge amount of political risk priced in the equity market. I mean, maybe in the currency, and you'd see some of the options around the euro and the euro yen, which obviously moved a lot right at the beginning. But in the equity market, we really hadn't seen a huge amount of that priced in. And I think it's maybe people getting tired of the politics. We'd seen the Trump effect, we'd seen the Brexit effect, and the outcome maybe hadn't been what people might have initially expected. So maybe they'd come out. But I mean, yes, this is definitely a window of opportunity for Europe, where you can step out of the shadow of the politics and look at the fundamentals, look at the earnings, look at the corporate profits, and those things should drive equities.
Those things should drive equities. What about the ECB story from here, then? Because we've heard a lot of debate in the last few days about, you know, how long can the ECB continue to give the same messages, although Mike Bell was talking about some quite bullish messages coming from Mario Draghi last time he spoke. But how long will the ECB sort of stick to its current guidance, and when will it start to reflect more of the positive data coming out from Europe? We got very strong data out of Germany, for example, yesterday, didn't we? Or survey data.
Yeah, let me just grab those PMIs. You chat.
Yeah. So sure, yes, I mean, exactly. So I think we're moving that way. We suspect, obviously not this week, but when you look into after we get past the elections in France and June, July meetings, they'll maybe drop the easing bias that they currently have. So they'll move to a more neutral stance. And then in September, they'll move to something that talks of tapering. And yes, you can. I mean,
these are this is what Anna was talking about. And I think what's absolutely staggering. And if you think what Macron is actually promising in France, it maybe adds this momentum. That is the French composite. Let me just move the annotation out of the way. That is the French PMIs. I mean, this is a strong. It's interesting. Germany's just on the turn.
It may be, although the PMIs, we've had this in the US as well. There's nothing to take away from
versus hard.
Yeah, exactly. So the soft data has been much, much better than the hard data. If you look at GDP, if you look at industrial production, you look at retail sales, all those kind of real numbers in the economy, they've not been as strong either here in Europe or indeed in the US. So there is maybe some extension in those factors, but undoubtedly it's good news. It seems to be widening out across Europe. Germany had been the area that's growing very strongly. Maybe some of the soft data in France is improving as well. And that's good.